So the end of the year is a time where you get to celebrate the holidays with family, you let your guard down just a little bit, spend some extra money, and you close out your financials and realize you spent a lot of money on interest during the course of the year. Credit cards, not really the best way to finance your life, and that's where Upstart can help. Upstart goes beyond the traditional FICO score when assessing your credit worthiness. They reward you based on your education and job history in the form of a smarter interest rate. They make it fast, simple, and easy to check your rate in just a few minutes. The best part, once the loan is approved, most people get their funds the very next business day. See why Upstart is ranked #1 in their category with over 300 businesses on Trustpilot. Free yourself from the burden of high-interest credit card debt by consolidating everything into one monthly payment with Upstart. So visit upstart.com/SSR. I've put a link right below in the description. That's upstart.com/SSR to see just how low your Upstart rate can be. Happy holidays. All right, so I understand the desire to save money, right? And especially on stuff that you don't feel like you need or stuff that you don't want to pay for. One of those things is car insurance. And why is car insurance such a annoyance to people to pay for? Well, because you have to. You're not allowed to not have car insurance. You're not allowed to self-insure, and then you're not allowed to select your rates. And a lot of this really impacts people that don't have a lot of money, that may have a bunch of tickets, or younger people that their insurance rates are just naturally higher because of the premiums associated with their age or whatever their risk is. Now, insurance, I agree, asks silly questions like, what's your level of education? Like a guy who's got a doctorate or a bachelor's degree is going to have any less likelihood, and I'm sure they have statistics for this, but have a less likelihood to crash than somebody who doesn't have a high school education. There's professional race car drivers that never went to college that I'm much happier to insure versus a guy who's a terrible driver who ends up being a doctor or something like that. So the metrics I get doesn't apply to everybody, but the insurance companies have their universal formulas. And the only way insurance companies really work is by making sure that you pay into the insurance company more than they ultimately pay out, which is why the rates are higher, because when you have younger drivers, lots of younger drivers are banging into each other, doing all sorts of stuff. So there's a lot of different reasons, and I get the reasons for the insurance company to raise those rates, but then that penalizes people that don't really have a lot of money. So you may be driving a $1,000 car and paying $6,000 a year to insure it. That's a tough pill to swallow. And here's the different ways people go about trying to get around that. And here's why you shouldn't do those. There's only one actual way to minimize the insurance premium risk that you're carrying or that is being associated with you. The ways people go around it, and these are all bad, and I'll show you why they're bad, is because, first off, getting a P.O. box and doing insurance that's out, fake insurance out of state. So you are the driver, but you're either registering your car or registering your insurance to a different car to a state in which you don't live in. Not good. And the other, and I'll get to why it's not good in a second, because I have an example, a very good example. Another one, saying, and that's the thing, saying you live somewhere you don't live, very bad. The second one that you have that people do to try to get around it is to say their cars are garaged in different states. This is fairly easy with the Montana LLCs and everything. You need to insure your car, regardless of where it's plated. It needs to be insured where it is garaged. That's very important, where it is garaged. Not, I've got a Florida plate, a California plate, an Alaska plate. If that car is garaged in Louisiana, you need to insure that car at the garaging location. And that's a very, very common thing that people do to try to get around the premiums. So be very careful with that. And why? Because if something happens, you want that coverage. And anytime, and I've had plenty of accidents in the exotic car space where insurance companies are like, I'm not covering that. I don't want to cover that. I just don't, it's expensive. I don't insurance companies' jobs, or the people that work there, are only pay for what you absolutely have to pay. And for people trying to get around those premiums, that's where you really run into a problem. And I'm not going to say people that I know, but people that I know have done stuff like this, and it's gotten them in trouble. I had a Lamborghini. There was a video that you saw, my gray Lamborghini convertible that flipped over, right? Customer was driving, it was raining, He hydroplaned because he was trying to pass a bunch of cars when it was a complete downpour. Lost the control of the car over a curb, and then it was just a happenstance that he crashed in just a terrible spot where the front end dug in, flipped the car in a ditch. Bad news. He hurt himself, hurt his passenger, and we checked the insurance before he went out. Everything was good, everything was valid, but even though he had a valid policy, his insurance company denied it. Why would you do that? Well, it's because he said he lived with his parents. And he's like, I live with my dad, so his insurance was cheaper. Instead of insuring something, say he lived in New York City, he said he lived in Connecticut with his parents. When they ran the insurance, they said, wait a second, you don't live in Connecticut with your parents. We're denying that claim. And now you're talking about a claim where this guy just totaled a Lamborghini, which is $160,000, $170,000 at the time. Then you injured yourself now, and he I won't be graphic, but he broke his neck. I think he needed some sort of plastic surgery on his head, and he went through this, and his insurance company walked, and that's a problem. And now I'm like, whoa, now we have insurance. Our insurance is always a backup. We've done everything we were supposed to do. We checked the customer's insurance. We verified the insurance. We can't send private detectives to make sure everybody's insurance lines up. But here, this is a situation where he said he lived with his parents. His insurance company started investigating. They said, you know what, we're out. We're not covering that. And then the claim was back sort of on us. Luckily, then our insurance company, we called our insurance company, they started following it through. And he was married. I don't know why he was trying to save money on his insurance policy, but he was married, and instead of saying he lived with his wife, he said he lived with his parents to get lower insurance rates. Ultimately, the woman he lived with, her insurance, even though she wasn't driving, she wasn't on the contract, anything like that, her insurance stepped in and paid the whole bill. So she should have been on it. He may have been dropped. She was probably dropped. There's a whole bunch of bad news there, but at least this guy didn't have to write the check, and that's very important. It always comes down to who has to write the check, and the reason you have insurance is so you don't have to write that check. And the only way that you can possibly do it, which is, let's just say, legal-ish, is not have a car in your name, not lie about anything. You're not saying, but you're going to be listed as a driver in a household. When you're of age, your parents, regardless of your car or their cars or whatever, their insurance is going to be listed based off of who lives in their household. If you have people in the household, their premiums may go up because you're in the household, but they can always say that it's their primary car, you may use it or something like that. That's the only sort of gray area that's really tough to prove that, you know what, I don't think that was your primary car. I think that was your son's primary car or daughter's primary car, and you're just trying to get around paying insurance premiums. That's the only real way you can do it without blatantly lying or breaking the law in a way where you're saying oh, I live over here where you don't. Oh, I just doing stuff like that is bad news. And the last thing you want to do, paying insurance, paying tens of thousands of dollars over years in insurance is something you may just have to do. It sucks, I get it, but you have to do it because if something does go down, you need to be insured. And that's what the unfortunate thing is. That's why people go above and beyond to try to get around paying these premiums because they're high. I drive a $1,000 car every day. I don't want to pay $1,000 a year to insure a $1,000 car. If it gets crashed, I'm never going to make a claim. My insurance company is never at risk of paying a claim on my Mercedes. But, you know what? It's just something that, I have to pay the insurance. It's state mandated. And you also want insurance because, say, somebody hits you and they don't have insurance because there are people out there that don't have insurance. They don't have insurance. You want to make sure you're covered from uninsured motorists or something like that. There's ways to lower your cost of insurance. You can raise your limits, raise your risk tolerance, use it almost as a catastrophe policy. But the other thing you don't want to do is you don't want to make claims. Oh yeah, somebody bumped into my car. Let me make a $2,500 claim. You know what? In the long run, that $2,500 claim might not be the best thing to do because that may jack up your insurance rates. You're making a bunch of little claims along the line. You set yourself up. Insurance claims are sort of the worst because even though they're no, we're not going to hold it against you. Oh, your rates went up. And that's just what happens. It's just something that you try to avoid. Insurance is a part of life. It sucks. I get the desire to minimize risk. The best way to minimize risk and the little trick to do multi-car discounts are where you start to see the most savings. And just say you pay $3,000 for a year for one car, $2,500 a year for two cars. You may pay $4,000 a year, which is even cheaper, for 3 or 4 cars. So you can go buy a $500 car, a couple of $500 cars, and say, here's my 5 cars I want on the policy. The values are here. And that'll bring the rates down on all of your cars. And you may pay $3,800 a year for 5 cars versus $4,000 or $5,000 or $6,000 for 2 cars. So stuff to keep in mind. I get it. I'm out to save you money. But I'm also out to make sure that everybody's protected if something goes down, because insurance is something you don't want to screw with. There's times that I've seen people try, I'll just insure for this. I'll underinsure the car. I'll overinsure the car. I'll make like, don't play games with the insurance, because playing games with insurance is also a crime, and that's the thing you want to avoid. So you live where you live. You insure your car where you garage your car, and you minimize your risk as best you can. Try not to get a bunch of tickets. Try not to make a bunch of claims or get in accidents, and that'll help your insurance rates. But the only way to truly avoid car risk, and something that people have done, is just rent cars. You can go, if your insurance is truly that high, go work out long-term rentals at, Turo, or like rent cars for the month. There's cars you could probably rent for $500 or $600 a month. You could be paying $500 or $600 a month for insurance. Now you're getting a car and insurance for $600 a month. That's a solid play. Same thing you can do with long-term rentals from Enterprise, Hertz, Avis, Budget, any of these major carriers. You may be able to get a car for what you would be paying for the insurance. And it is something that if you can go through life and you have a clean license, they will always run your license. They will always do sort of a check on you when they do your insurance. They do credit checks too, which is weird to me. Like, I don't think if somebody, and there's got to be a correlation, but I don't think just because somebody has bad credit or not a lot of money that they're more likely to get in an accident. They may be more likely to make a claim if they have bad credit, because they can't afford to float maybe $1,000 or $2,000 repair. But at the end of the day, there are ways to do it. Reducing your insurance risk, having extra cars, stuff like that is the way to save money on insurance, not by defrauding the insurance company. So that's out there. I wish you guys luck. Don't do any of that. Don't out of state. Don't P.O. box anything. Don't say you live with somebody you don't live with. Like, just do all the stuff you're supposed to. So if something does happen, you guys are covered. Rob Ferretti, thanks for watching, and minimize that insurance payment. I get it. I've been there, but I also had to pay my way through that. Thank you for watching. See you later. For those of you not familiar with my other company, I started a company called Adventure Drives, which combines driving and bucket list travel. It's a lot of fun. If you're interested, prices can be done per person. Don't worry if you don't have somebody to go with you. We can match you up with somebody. You can check the link in the description for adventuredrives.com and sign up today.